Today's date is March 31st, the last day of 2023. This is the MetaMentors with this week's hottest crypto news. You got Kwon got arrested. He's going to face the man. You got Saylor of MicroStrategy making big moves, incorporated with Silvergate, the bankrupt bank. You got Arthouse Spirits with the largest inventory of stored aged rum. I think we'd all like to get some access to that. You got Litecoin being deemed a commodity. There's only a few of those. That's big time. And then you got the scathing Whitehouse economic report. This is MetaMentors with your March 2023 news. As always, this is not financial advice. Subscribe, comment below. Let us know if we're doing a good job, terrible job, if we're wasting your time with these news reports. They're helpful for us. We hope they're helpful for you. So thanks for following along.
All right, so first thing up on the news is Kwon finally arrested. If you remember correctly, he was the founder, CEO of Terra Luna. Last year, I think it was around May, Terra Luna collapsed. They had a depegging incident with their algorithmic stablecoin on the Terra network. It started to depeg from the dollar. People started to pull out money. Once they did that, they realized they weren't really backed by anything. The stable coin wasn't that stable. And
that's what started all this, wasn't it? Last year, it was the first coin or first tragedy of the crypto market to really offset everything.
Yes, because we weren't exactly still going up from January to springtime, but definitely when that hit in May, the bottom fell out and then it just kept falling. So that was the Luna crash. The coin went from $120 each to a fraction of a penny each. I think they said they believe that there was over $42 billion of value lost in a matter of months. A lot of it due to fraud. It took them a while to finally kind of dig to the bottom and figure out what exactly happened. But in September of last year, I think the crash was in May. In September, South Korea issued a red alert Interpol arrest, notice for Kwon because of fraud. And so he's been on the run since then, although he's active on social media and he keeps telling people he's not on the run, but he won't give anybody, he didn't tell anybody where he was at and he wouldn't, be seen publicly. But turns out they found him in Montenegro. I'll put up a map right here. You can see Montenegro is in southeastern Europe. It's part of the Balkans next to Bosnia. He's been hiding out in there with what is believed to be fake travel information, fake passports and stuff like that. He says it's not fake. But that's a whole nother crime if he gets caught with fake travel passports. And so I don't know how it's not fake, or they would have known that he was there. But apparently he's got some explaining to do. Montenegro has a 72-hour rule where they have to find, and charge him with a crime within 3 days, or they have to let him go. But because of a special request to the court there, they're going to hold him for 30 days. So when you're a high-profile guy that's a definite flight risk, and you have who knows how much money that you can, skip off to the next country, they're going to hold him for 30 days while they try to get this case against him and get him, I believe, brought back to South Korea. So, yeah, it's bad news for him, but it is good news for crypto. It's just like Sam Bankman-Fried. I mean, you got to weed out all these bad actors. If we ever want to be taken seriously on the world stage, you can't have people just losing $40 billion every other month, which was what it seemed like was happening last year between SBF and Terra Luna and, FTX. Every other week, there was billions of dollars of people's money just getting misplaced, mishandled, or lost. So, it's bad news, but it's necessary.
Clean up crypto so we can be a reputable gang. On March 24th, so just last week, MicroStrategy paid off a 1-year-old Silvergate bank loan of $205 million. If Silvergate sounds familiar, Ben, it's because they were the first of the banks to go bust just a few weeks ago.
What do you mean the bank is out of money? Insolvent? You only have enough cash for the next 3 customers!
They started piling up, so it's almost hard to keep track of. MicroStrategy is the largest corporate holder of BTC. Its founder and former CEO, Michael Saylor, went ham over the last 2 years purchasing Bitcoin. The Silvergate loan term was for 3 years, and it was secured by 34,619 of MicroStrategy's Bitcoin. MicroStrategy was...
How many Bitcoins does he have total? Do you know?
Yep, and I'm going to tell you, but it's 138,955.
Gotcha.
And
Sorry to interrupt.
That's all right. We're going to have a little fun math here in a minute too. So,
all right.
I know you look forward to that. MicroStrategy was able to negotiate a discounted payoff of $161 million of that $205 million loan. That's roughly 21% discount. And of course, they were all able to do that because Silvergate has gone bankrupt. And the trustees over it now are trying to get as much capital as they can out of them or out of Silvergate. So in addition to receiving the discounted payoff of $161 million, MicroStrategy also received their 34,619 Bitcoins back that they had secured against that loan. So they got 34,619 back. And if that wasn't enough, they decided to go and buy 6,455 more Bitcoin just over the last couple months. And that's total. They spent like $150 million to get that additional Bitcoin. If you break that down, that's an average of $23,238 per Bitcoin that they just paid for this newly acquired 6,400 plus Bitcoin.
And at the current price, that's a good deal. That's a heck of a deal.
Yeah, that's below margin, but it still puts them a little bit underwater, and that's what I'm getting into here. That puts MicroStrategy's total Bitcoin holdings at $4.14 billion at purchase price, and that's that 138,955 total Bitcoin that they now hold. So if you take that 4.14 billion divided out by their total, their average price that they paid per Bitcoin is $29,817. So now, what was today's Bitcoin price, or where are we at right now?
I got it right here. Bitcoin is at 28,400.
So if you take 29,000,
so if it goes up $1,000, they're back in the black.
Read it to me again. 28,400. 400. Okay. So they're in a deficit of $1,417 per Bitcoin at this moment, and they own 138,955. So they're currently in a deficit of $197 million, which here's what's fun. When I did this calculation yesterday, it was $350 million. So they've gained over $150 million just in a day with what Bitcoin has done. But even those numbers are way better than the $1 billion they were in a deficit last year at the bottom of the bear market. So they had an impairment, crypto terminology, of $1 billion upside down, be the simple terms. Although unless you sell, it's not finalized.
Right. And Michael Saylor is not a guy who sells Bitcoin. He's a long-term believer in it. He's one of the, what do they call them? Bitcoin maximalists, where he's hanging on for the long haul. So the fact that he's down $150 million right now probably doesn't even faze him in the slightest.
Not even because he's looking at the long term, which kind of brings me into my next point. So here's my main takeaway from this article and MicroStrategy's strategy. Borrow as much money as you can to buy Bitcoin, because the lender's probably going to go bankrupt and you can pay back the loan at a lesser amount.
You know what? Michael Saylor has been saying, he hadn't said that it would go bankrupt, but he said that was the best thing. He said, if you can borrow against anything, your house or whatever, if you can get a loan for 300, or 3% or something like that, he's always said the best possible thing you could do right now is buy, borrow, whatever you got to do to get as much Bitcoin as you can. And he just lucked out that whole bank went belly up and then was taking pennies on the dollar for it. So, man, he just in the right spot, at the right time, all the time.
Yeah, he's buying for the long term. So, and that's and to me, what that means is the current whatever that current, but the current price of Bitcoin is irrelevant for the most part if you believe in the long game of Bitcoin, which Michael Saylor does. And specifically the long game being the timing of its decentralization, the underlying technology of the blockchain, the security that Bitcoin provides against other financial assets, especially the dollars, like he's borrowing to buy Bitcoin with. And then the limited supply of Bitcoins. There's only going to be 21 million ever. There's currently 19 million in circulation, but it's a limited supply. So you hear a lot of those financial guys saying what Michael Saylor and many others are doing is borrowing bad money to buy good money with. And that is very dangerous because that's leverage, which everybody will tell you do not apply leverage with cryptocurrency. But there's an exception to every rule.
Right.
And Michael Saylor is going ham. He's
if you've got billions of dollars and can do it, it's one thing. If you've got $400 in your checking account, pace yourself. But if last year when at the beginning of last year when the price of Bitcoin was sub 20,000, 14, I think it was around 16,000, and mortgage interest rates were still at 2 to 3%, you refinanced your home, took some money out and put it into Bitcoin. Not only is the coin up $10,000, but also now if you were going to try to do that right now, interest rates are what, 5, 6, 7% on a house loan. You know what I mean? So that's literally taking bad money and buying good money. That's the whole thing that he keeps talking about, is all the money, all these fiat currencies around the world, whatever you've got, turn it into sound money, which he believes is Bitcoin. And so far, I cannot prove otherwise.
Yeah, he's called for a $500,000 Bitcoin the next 10 years. There's many that are calling for $1 million Bitcoin even prior to that, but they all agree that it is going up exponentially. It's just a matter of time, not if. It's how long will it be.
And they all agree, along with everyone else who has any idea about anything, that it's a better choice than the U.S. dollar.
100%.
The U.S. dollar is worse than Terra Luna.
Yeah. Well, there's a whole nother subject we could go down, which I talked a little bit, got a little too detailed in our last video, but that's what I got. Michael Saylor and MicroStrategies making moves.
All right. Well, we're always looking for new and innovative things in the Web3 market. That's one of the things we like to bring up on Crypto News. I mentioned this, I believe, last week, but this week we're digging a little bit more into it. We'll still make it pretty quick, but we've got the Arthouse Spirits DAO. And what that is, we all know that DAO is a decentralized autonomous organization. So it's like a group that you would buy into.
Say it with me, kids.
I'll put it down here at the bottom. Decentralized autonomous organization. These are groups that basically run by themselves, or they run on a protocol that you can buy into either with a coin or with an NFT. This one, the Arthouse Spirits DAO, you buy into it with a NFT, a membership NFT. Let's just bring it up. That's way too big of a head there. How about this? I disagree with this. The world's first ever closed community of high net worth individuals. I feel like there are cliques all over the world.
Pitch.
Yeah. But what it is you buy into this pretty exclusive NFT collection, and it gives you access to the Arthouse Spirits DAO, their treasury of aged rum. And according to this website, they have the largest collection of aged rum in the world. It's currently valued at $1.5 million. we'll just take a look at their treasury. It shows you what they've got. $1.5 million worth of collectible aged rum. And it shows you some of their stuff that they've got down here, collectible bottles, and then the, hard to get sets, 24 bottles, different cases. I thought that was pretty cool. So there's $1.5 million in this treasury. And by buying into one of their NFTs, if you buy into this membership NFT, you become a part owner of this DAO. And so what happens is when these rums increase in value and the membership DAO decides to sell a bottle or a set or a case, you benefit in the form of ERC20 rewards that are paid out based on your NFT, which NFT, and how many NFTs you own. Once you buy an NFT, you're automatically involved in the exclusive access to the luxury events and the physical perks. It immediately becomes staked and it starts earning you ERC20 rewards. So there's nothing you need to do every time a bottle gets sold. All that stuff just gets put into your wallet. The membership NFT is the bottom tier for getting into this. If you want to be part of it, that's the one you would start with. If you want to be a part of the exclusive group, the treasury NFT, first you have to buy a membership NFT to get into it, but then they're going to do a limited edition of 1,000 NFTs with a minimum price of 10,000. So you actually get to set the price of your NFT. It could be up to $1 million or as low as 10,000. And then that's the value that's on there. And all of this money from both sets of NFTs goes into the treasury and allows the DAO to buy more bottles of this aged rum. So the cool part about the treasury NFT, not only do you have more power in voting and stuff like that, but you're also able to trade in some of your ERC20 rewards in the future for actual physical bottles of rum.
Yeah, that's what are they going to get? Jack Sparrow? Who likes rum that much? I mean, if it was
Jack
whiskey,
Sparrow.
you could have all my money, but rum?
So this project looks really good. The treasury is in the Netherlands. I believe I read somewhere on this website. They've got a great roadmap and a real thorough team. The only thing that kind of caught me off guard with the team is they've got the president of Dictator, which is the real world rum company that's got all of the rum in storage. But the CEO of the Arthouse Spirits DAO is Mika, an artificially intelligent CEO who they bounce all of I guess they run everything through her. Can you see that?
Interesting.
Yeah, isn't that weird?
Yeah, we need to mark this down because we're going to see a lot more of this type of stuff. But
I have seen them
interesting.
use AI in a lot of stuff, but more like marketing and stuff. But they actually, underneath the guy who is in charge of the real world collection, basically the curator of the rum collection, is the CEO of the Spirits DAO, and it's AI, and then everybody else, I guess, is under her. So pretty interesting.
Yeah.
Yeah, and like I said, I think the treasury is based in the Netherlands. I don't remember if there was anything else that I needed to point out. Ryan and I talk all the time about real world use for NFTs. I think the only other thing is the pre-sale starts in exactly 2 weeks, April 13th. So if you're looking to buy a $10,000 or $1 million NFT to get involved with the treasury NFT of the Arthouse Spirits DAO, time to start looking at it. You can actually sign up on their website and get onto their whitelist. All right, and that's it. The only other thing I was going to point out was these NFTs that they've got. It's basically each one of the NFTs is a unique bottle, and each one of the bottles has the city topography, like a map, basically stamped on them. So that's why you can see this kind of the very intricate design. It's got the latitude and longitude, and then it's actually a topographic map that's been stamped on this NFT bottle from these different cities, some of where the rum is from and some just Paris and London and notable cities, which I thought was really cool. If you get a close-up look at some of the NFTs, there's some really interesting stuff. So,
yeah, I just figured it looked like just fuzz or some type of craziness on top of it, but
yep,
wow, it's actual city.
I'm sure after the pre-sale or during the pre-sale, you'll get a better look at a lot more of these. But yeah, they said they're topographic maps wrapped around a 3D NFT bottle of rum.
What if it turns out to be an actual treasure map that you have to
wouldn't that be cool?
use to find your rum or some?
I mean, that's 100% what I
the
associate.
CEO.
I can't think about rum and not think pirates and treasure. So yeah, you're right. When you put a topographic map on there for a real world, I mean, they call it the treasury. You know what I mean? They've got a treasury full of all this real world rum. I don't know.
I think we better come up with $10,000 real quick.
I think we better get
this is clearly a treasure map.
So
you heard it first, MetaMentors.
If you don't see us on the air next week, we're treasure hunting in the Netherlands.
Well, we'll have to follow up with that in a couple of weeks once the pre-sale goes live. We may have found a reason for you actually to start drinking alcohol, man. Treasure hunting. It's for the good of our MetaMentors. Don't be so selfish.
That's peer pressure.
On to the next. Okay, so Litecoin, which is synonymous with, well, not synonymous, but connected with Bitcoin a lot. They call Bitcoin the digital gold. They call Litecoin the digital silver. And because there's some connections there. Anyways, that's not what this news article is about. But Litecoin last week was labeled a commodity by the CFTC, the Commodities Futures Trading Commission. That's a huge deal if you follow crypto, because obviously the SEC is wanting to label everything as security. The only thing that the SEC, the only crypto that they've given a pass on is Bitcoin to this point. The CFTC, the Commodity Futures Trading Commission, has labeled Bitcoin, Ethereum, and as of last week, Litecoin as commodities. And so I thought that would have sent the price through the roof. It didn't really, but that's because Binance is being sued at the same time, so which drug it down. So you had these offsetting deals. But anyways, Litecoin being labeled a commodity is a great big deal, not something to be overlooked. And so here's a little bit about it. Altcoins now potentially safe from further scrutiny from the SEC. The CFTC has explicitly named Litecoin, along with Bitcoin and Ethereum, to be a commodity under their jurisdiction. And here's what's kind of interesting about this. I was talking to you about this, Ben, is the CFTC is now labeled Litecoin as a commodity, but there's an advantage to them doing that. Anything that they consider a commodity, they get jurisdiction over. If it's a security, then the SEC has jurisdiction over it. So there's a good reason for the CFTC to label things a commodity. Now, they're not just going to go out and do it to try and, get regulation over some stuff, some jurisdiction. But if it's within their realm, there's some benefits for them to label it a commodity. So you have to be a little careful there. You can't, I guess what I'm trying to say is you can't take it to the bank yet. We don't know for sure what's going to happen, but it's a huge start, especially since there is only Bitcoin, Ethereum, and now Litecoin that have been labeled an actual commodity. Continuing on, the SEC has recently muddied the regulation clarity around ETH, which we've been hearing a lot about. The Litecoin hasn't been under scrutiny by the SEC. However, making this latest naming of Litecoin a commodity is something that could throw it into the arena. So the SEC might start paying a lot more attention now that the CFTC is trying to get their paws on Litecoin. So keep an eye out for that. I'm still buying some, not financial advice. In the past, periods of economic distress, high inflation, or war, investors flock to safety of precious metals like gold and silver, which are commodities. Due to this attribute, silver and gold have been used as money throughout history. So basically what I'm saying there and what this article is talking about is during times of turbulence, commodities are what people generally hold their money and move their money into. So if you have gold, silver, oil, and now you have digital currencies like Bitcoin and possibly Ethereum and Litecoin, we could see a lot of dollars and currencies going into these commodities. Lastly, Litecoin being labeled a commodity officially by the CFTC, combined with a network growing faster than Bitcoin. So Litecoin is currently growing faster than Bitcoin in use. Litecoin could see a dramatic change in sentiment in the near long term. So again, this article is just telling you, hey, do your own research, but we could definitely see an explosion in Litecoin. And to help back that up, Litecoin has a halving that's coming up in less than 120 days. We know with Bitcoin, when it halves every 4 years, that we tend to see a huge pump in Bitcoin. Litecoin's no different. It's gone through 2 halvings to this point. This is the 3rd halving, and each time it's taken a huge pump. So here's some numbers. So just like Bitcoin, Litecoin is coming up on its 3rd halving. It has a halving every 4 years, just like Bitcoin. And if you're not familiar with crypto, halving just means the reward that you receive when you mine the coin, if you're a miner, drops in half. So it's going from 12 and a half to 6.25 Litecoin reward at halving. What's important for us non-miners is that there tends to be a pump when you have a halving coming up. And this one is going to happen in August of 2023. So we're less than 120 days away. And some say it could be as early as July, but from what we're seeing, it's going to be August. And so the reward will have, but prior to that schedule, there's a very, very good chance, if it's anything like the last 2 halvings, you're going to have a huge increase in the price of Litecoin leading up to it. So here's a few statistics from TradingView. TradingView reveals that Litecoin actively rallies before its halving. For instance, before its first halving, Litecoin bottomed 122 days before and then rallied 820% after the halving. And then it continued to rally again 14,200%. So if that's not a couple large pumps, I don't know what is. So basically it kind of takes a dive and then it goes up huge. That's the first halving. Let's see. After the halving, a temporary reversal is seen for Litecoin. Litecoin retraced 73% over 578 days on the first halving, and then it retraced back up. So it improved again to a negative 83% at 458 days after the halving. So what does that mean? There's some fluctuations in the price, but ultimately you'll see a dip and then you'll see it climb tremendously, or at least in the history it has with the halving. So right now it's not a dip, but it's stayed pretty low because of the bear market. So yeah, there you go. There's a huge possibility that you could see a massive increase, and it could start happening anytime. This is another one of those, kind of like we've talked about, Ben. There's so much turbulence in the market right now. Like a lot of this stuff is just not even being paid attention to. Like halvings traditionally have sent currencies skyrocketing, but there's not many people talking about this because there's bankruptcies and there's crypto fraud and there's all this craziness stuff. Might be a big opportunity if the past is any indication of what's going to happen with this halving here in later this year.
Yeah, and it looks like right here, back in 2021, the top price of a Litecoin at that time was $360, and right now it's around $90. So I always like to think that we're going to go above and beyond the all-time highs. So $90 to over 360, I'm going to say over 400, maybe even 5 times. Not financial advice, but buy some Litecoin, man. It's been around for forever. It's been around since the early days.
It's got some real utility, and now being labeled a commodity.
Yeah.
That's a good
thing. is interesting because what I'm getting ready to talk about is the White House's most recent economic report, which
Love the White House.
which was
Always
not,
good stuff coming out of the White
yeah,
House.
especially lately, it really has been. So the economic report of the president was released this month and basically was just a whole checklist of things they don't like about crypto and Web3. And they talk about everything from Bitcoin to commodities to securities, Ethereum, the whole nine. Basically, they are not fans of it. They're trying to stop it in every way possible. They're talking about how the U.S. dollar is and should be the primary choice for all American citizens. And actually, we'll talk a little bit about that same place that put out the economic report is also suing CZ right now for luring Americans over to the sordid. Let's see, what do they call it? The sordid industry of crypto derivatives. That's what it is. They're basically luring Americans over. Anyways, a lot of the economic report talks about actual crypto companies and some of the dangerous things that are happening, which in their defense, last year again with FTX and Kwon and stuff like, there are bad players in the industry. It's kind of like when you're a kid and you're going to recess and there's that one kid that keeps smoking behind the school and the teacher says I can't let you guys go to recess if you guys are all going to keep smoking, and everybody's pissed off because it's just the one kid that's over, 19 kids are doing what they're supposed to, but you got the one kid that's always ruining it for everybody. And that's what's frustrating, because that's what they're focusing on, is the few players in the industry that are really screwing it up, not the big projects, not Bitcoin, not Ethereum, not the metaverse projects. They're focusing on the few things that keep getting wrapped up in fraud.
The fear of unknown. They're letting the fear of unknown drive their insecurity.
And then again, in their defense, they're mad at the whole crypto and blockchain industry, but not just because the crypto and blockchain industry, but because some people who are unaffiliated with the crypto and blockchain industry are like changing their name just to be a part of the, which is deceptive. Fraud is one term for it, but deceptive at the very least. One example is Long Island Iced Tea temporarily changed its name to Long Blockchain in order to ride a stock price wave, despite not having anything to do with the blockchain at the time. So a couple years ago, especially in the aftermath of the lockdown, when people were really buying crypto and it was really starting to shoot up again, companies were changing their name or throwing blockchain or throwing Web3 they were throwing all these buzzwords into every piece of paper that they could find to make sure that when somebody was looking up, oh, I want to invest in a blockchain company, their name popped up, even if all you sold was Long Island Iced Tea. They changed it to Long Blockchain. So there is stuff that I don't mind. I mean, I always mind the government doing anything with it, because I think the free market will eventually work it out. But there is stuff that needs fixed, mostly fraud and stuff like that. So there is it understandable, but it's obviously a giant government overreach again, and it's hurting the industry, the players that are doing what they're supposed to, by going after the people who are obviously fraudulent.
It's my observance that it's getting really dangerous. And I may be completely wrong. It may just be the media or whatever, but the US is it's getting very scary how much they're trying to put their hands on stuff and squash this innovation. And it's very clear it's already too late. The innovation is here. So we're either getting on the train or we're going to get left in the dust. And a good example is Europe. Europe has done a good job of when we squash something, they go the opposite, and Europe of all places, but they're or England, I should say. And they're like, you know what, we're going to actually open this up and make a specific, category for it. And so the U.S. and the government is squashing this technology. It's going to cost a lot of freaking money in jobs. Like, it's already too late. Like, you're not going to kill crypto and Web3. It's a
Right.
superior technology, but yet we don't seem to get that.
They will just go overseas to do it. Like, I
Yes.
mean, and so one of the things actually that we're talking about when you were talking about CZ and Binance getting sued is the Commodity Futures Trading Commission, who you were talking about, is suing because CZ is not just allowing Americans to trade crypto derivatives, which they're allowed to operate in the country on a light form, but they're not allowed to let them do a lot of the higher risk crypto stuff without being registered with the Securities and Exchange Commission. But it turns out some of the people from Binance have been communicating with VIP customers and high value customers, explaining to them how to get around some of the rules in America, like using a VPN and doing stuff like that. So now some of those emails have come to light and they're currently getting sued. But this is just one of those things, like you and I were talking about earlier this week. It's not really on everybody's forefront to think about just leaving America or going somewhere else. But a lot of these tech jobs, a lot of the smartest people in our country who have the highest paying jobs, if they want to buy Bitcoin and the US keeps squashing it, it's not a big deal for them to move to another equally, like another first world country that just has way better crypto, like we talked about Portugal and is it what's the not Saigon? What's the
or not Taiwan? You're talking about
Singapore is what I'm
Singapore.
thinking of. Yes, very crypto friendly rules, but it's like that's becoming more and more of a possibility. And the more you squash, especially when you're talking about, okay, well, some of these people are making, 150, 500, $1 million a year at their crypto company or their tech company, and they can do that job with their laptop in an apartment in Singapore. And on top of that, they can be buying tax-free any Bitcoin. They could be trading. They could be doing whatever they want. Why would they not do that, even if just for a few years? Because you can go do that while you're working and then turn it into whatever type of currency you want and then come back to America or retire anywhere you want. And it's like you're not stopping the industry. You're only letting all the high-paying jobs leave the country and go elsewhere.
Yeah, it is. It's so freaking dangerous. America has gotten way too big for their pants for when it comes to this type of stuff. It makes me think of all the, the number one leaders in certain industry, like Blockbuster was for movies. And then, the early versions of Netflix or whatever was coming around, not Netflix, and they looked at it and said they could have squashed it or bought it out or whatever. And they said, that's ridiculous. Who's going to do that? Right. And then next thing you know, they're completely out of business. That's the approach we're taking with America. They're like, we're America. We're not going to be messing around with this hoofy, poopy, fraudulent, crazy. Like, they completely are not getting it. Like, you're seeing it happen in live,
You're exactly right. That's the thing. It's they think that it's too big that people will, it just won't do this. People will find a way. The technology is only getting smarter and better, and people are just going to keep going around, if at the very least, just leaving the country and going and doing it somewhere else. So they really need to get their head out of their butt and start figuring out how to work with. You can help shape the industry. That's not a problem. But to try to just put your thumb on everything and squash it outright is not working. It will not work. It's never worked. And like you said, that's the Blockbuster. Like, well, I'm not worried about a little Netflix. We're just not going to even play ball with them. And now Blockbuster is nothing and Netflix owns the world. So let's see. That's what I've got on the economic report. To recap, the government hates crypto, at least publicly. Again, Ryan and I talked about this. They tend to do this publicly while they're secretly loading their own bag, buying Ethereum, buying Bitcoin, and so
what's that saying it's like first they ignore you, first then they laugh at you, then they
fight you
or fight you. Yeah.
I know what you're talking about, but yeah, and that's that's the way it is with a lot of congressional investors. Is they're playing one game in the public eye, and they're secretly doing something over here, and like when JP Morgan told everybody that worked for him, if you bought Bitcoin, you would be fired. If you tried to sell Bitcoin, you would be fired. If they saw you or heard of you hawking cryptocurrency, you would be fired. While JP Morgan, the company, is buying Bitcoin. You know what I mean? And it's like they say one thing, and I think that helps lower the price. If they can say, crypto's terrible, and then the Bitcoin goes down to 10,000 each, and then Nancy Pelosi can buy $1 million worth and then say, actually, we're going to allow it. Then it goes back up. You know what I mean? Now she's rich. Very convenient for them.
Unbelievable.
But that's the bad news. Government still sucks and hates crypto. Good news is when we're talking about the industry that can't be stopped. Here, let me pop this up. Check this out. We got the final numbers from the Dookey Dash, the game from Yuga Labs. So there were 26,000 holders of the Sewer Pass NFTs that allowed people to play. Those 26,000 holders on average played the game for nearly 28 hours each. So 26,000 people played between the time of January 19th to February 8th. So not even a full month, about 3 weeks. On average, 26,000 people played 28 hours each worth of this game, which is around 80 years collectively. Around 7.5 million runs, which if you remember, the game was like a run through there. So 7.5 million runs. People are having Dookey Dash withdrawal. They're practically begging Yuga Labs to come up with another game or open back up Dookey Dash or do something. People love this. I mean, this is the kind of viral, mouth-watering stuff that this industry is capable of. People want to play this. People want to have a part in this. People are done being bored with crypto. They want high-quality games. They want big prizes. They want to be able to post stuff and talk about stuff on Twitter. As negative as the CFTC economic report is about crypto, this is the exact opposite. And it's like, look, America is not on board, but America is one of 170 countries, and everyone else, American citizens, as well as the rest of the world, love crypto, love Web3, love gaming. And and this is proof. I mean, those are outstanding numbers for one individual game.
Yeah, that's pretty ridiculous.
So
awesome.
That's what we've got on the news. Here's some coin prices. Currently, Bitcoin, everything went up just in the last couple days. So we're on a current rise right now. Bitcoin's at 28.4. Ethereum's at 1,800. We got Cardano at 38.5. Polygon at 112. I know that it went up, and you could see the prices over here. The Litecoin's up 13%, but some of these prices are still down. It must have been a pretty good dip recently over the last week. So everything's kind of recovered from the dip. Which one did I see? One of them was up 14 or 15%. Oh, Algorand, was that what we were talking about?
Yeah. You said 17%, I think.
Yeah, the one with the California DMV stuff on there. So pretty cool. Those are good prices. That's what I've got for news this week. What, you got anything else?
No, sir. It's a full week like always. We'll see you on the next one.
All right.